Hey guys, it is Julie here with TipRanks. Today we're taking a look at two stocks that are both priced under $10 per share. There is one top-rated analyst at Oppenheimer who believes they both have over 100% growth potential in this next year. We're going to take a closer look at what these two companies do and if other analysts agree. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to check out the TipRanks Instagram page for other great stock-related content. The link will be down below in the description. All right, let's jump right into these two stocks. The first company on our list today is Aeva Technologies. They trade under the ticker AEVA and are currently priced at exactly $10 per share. Aeva Technologies works in the field of sensing and perception technology, an essential field in the autonomous automobile industry. They focus on their breakthrough perception sensing technology, which is a unique frequency modulated continuous wave or FMCW technology that offers unparalleled sensing capabilities. It has instantaneous velocity per pixel, long range with 100 times higher sensitivity, and is free from all interference. Machine perception has evolved from using basic vision sensors to multiple sensing solutions for new capability and safe function. Today's devices require color, velocity, depth, reflectivity, and inertial motion. Aeva 4D LiDAR is the first sensing solution to meet all machine perception requirements and is built on silicone photonics, enabling broad adoption at industry-leading costs. Their mission is to bring the next wave of perception for all devices, and their long-term view is on the end state of technology, not just what's available today. Their breakthrough FMCW 4D LiDAR fundamentally changes sensing and perception paradigm. Their proprietary semiconductor laser is based on proven processes and is a 30 times lower cost versus the legacy 3D LiDAR. They also have a unique modulation breaking legacy 3D LiDAR dependency between max range and pixel density, with each beam being capable of millions of pixels per second. On top of this, they are partnering with automotive leaders to bring 4D LiDAR to the market. This includes Porsche SE, who made investments in Aeva in 2000 and 2019, as well as TuSimple, which is a leader in self-driving truck technology. They also work with Denso, which is one of the largest automotive Tier 1 suppliers and a leader in commercializing advanced technologies at affordable costs, and ZF, which is one of the world's largest automotive Tier 1 manufacturers and suppliers to most top OEMs. Aeva Technologies just hit the public market via a reverse merger with SPAC company Inter-Private Acquisition. They began trading under their own ticker on March 15th. Now, in mid-May, they released their first earnings report as a publicly traded company. They announced that the company had netted $513 million from their SPAC merger and now had $523 million in cash reserves at the end of their Q1, compared to just $24.6 million at the end of 2020. They had revenues of $0.3 million compared to $0.5 million in the prior year period, and a GAAP operating loss of $20.1 million compared to an operating loss of $7 million in the prior year period. In a key development update, Aeva revealed that its third-generation LiDAR chips is in its final architecture and has integrated all of the core LiDAR components. The company is engaged in setting up production lines for the new chip. Covering the Aeva stock is five-star analyst Colin Rusch from Oppenheimer. He comes in as number 7 out of over 7,500 analysts. He says that Aeva continues to make tangible progress towards commercializing its FMCW-based 4D LiDAR, announcing its ability to offer 500-meter range on existing hardware via a firmware upgrade. We believe the flexibility and potential future proofing of systems enabled by its software-defined architecture, combined with the velocity information, is critical for its customers and the potential for product improvement during its useful life. We are encouraged by Aeva delivering its Gen 3 chip design ahead of schedule. We continue to see Aeva as a long-term winner in the LiDAR and autonomous space. Colin rates the stock a buy with a $20 price target that would be a 100% growth potential from their current price. Now, there are 4 other analysts with ratings on the stock, so do they agree with Colin? The answer is yes. All 5 ratings come in with a buy. The average price target is $23.40 for a 134% upside potential. The highest price target comes from 1 month ago from Roth Capital with a $30 price target, which would be a 200% gain potential. The second company on our list today is Aqua Metals. They trade under the ticker AQMS, currently priced at just $3.08 per share. They deal with one of the worst industrial pollutants, which is lead. Lead is used in a wide variety of products, notably in pipes and batteries. From there, it can leak into the environment and eventually into us, and its toxic effects have been proven dangerous. This results in lead being one of the most recycled materials in the world today. Aqua Metals specializes in clean recycling technology for lead-acid batteries. The company uses its proprietary Aqua refining process, a water-based room temperature lead refining process that is non-polluting, to replace the current system of high-temperature lead smelting. Such lead smelting is one of the world's most polluting industries. Aqua refining uses water and organic acids to create 99.996% ultra-pure lead, one atom at a time, for the over $20 billion lead recycling industry. High-growth LAB applications require more high-purity lead. Renewable energy economy is growing, and they are dependent on energy storage to be efficient and effective. And electric vehicles use recyclable lead batteries to support electronics and lithium batteries to propel. So LAB battery production constitutes the largest use of lead today. Annual LAB sales are expected to nearly double to $84 billion by 2025, and LABs still represent over 95% of all batteries produced. Compared to traditional recycling technologies, Aqua refining offers large advantages. They enable global battery recyclers to meet demand and reduce environmental impact, all of this at an equal or lower total cost to recycle. The company shared their most recent earnings report at the end of April. Now, Aqua Metals processes are not yet in operational use, so the company has no revenues or earnings to speak of. In their first quarter of 2021, Aqua Metals reported a net loss of $4.1 million, coming to 6 cents per share, comparable to a $4.4 million loss or 7 cent per share loss in the year-ago quarter. Also in the first quarter, they invested $1.5 million in the Linico Corporation, another clean tech company in the lithium-ion battery recycling niche. Once again, commenting on the stock is 5-star analyst Colin Rusch from Oppenheimer. And he is bullish on this speculative company, saying that we continue to believe Aqua Metals' closed-loop zero-emissions process technology for recycling lead is a critical enabler for portions of the battery supply chain to reach net zero emissions and has the potential to become the de facto standard process for recycling lead as the world moves towards net zero commitments in 2040. We are looking at the announcement of a license and equipment supply agreement as the next and critical validation of their business model. Colin rates the stock a buy with a price target of $7 for a 127% upside potential. And there is one other analyst with a rating on the Aqua Metals stock. And that is from Amit Dayal at H.C. Wainwright, who gives the stock a buy rating with a price target of $8, which would be a 159% upside potential. On average, the price targets come in at $7.50 for a 143% growth potential. So there are two stocks that analysts have their eye on with some big upside potential. Now, I always love hearing from you guys, so make sure to leave your thoughts in the comments down below. What do you think of these two companies? Are they ones that you've ever heard of before, or are these brand new to your radar? Let me know what you think. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching today, and we will see you back here next time.